Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, July the 5th. The year's 2022. Let's talk trading, gambling. These videos are for educational purposes only. Your results may differ from mine. Now, we're talking about trading, and I don't even remember how many years ago. I think I did a video or a few videos about trading versus gambling. And I realized something about gambling and trading. Why you really can consider trading gambling. If you think about trading, when you walk up, to the when you go up to your trading platform and you put a trade on, at that particular time, you can enter a stop loss and or a take profit level. And when you do that, essentially, you're gambling. And here's the reason why. When you go into a casino and you sit down at one of the games or you stand up at one of the games, when you place your bet, that's the amount you're willing to lose. And if you've been watching my videos for any time, you know there's risk management screen, where the risk is the dollars or the percent of your account that you're willing to lose on any one particular trade or bet. So back to gambling. You put your stop loss on, you're basically saying, I'm willing to lose, say, $100 on a trade. That's no different than putting $100 down on the roulette table, betting it on black. If it comes up red, you lose. If it comes up black, you win, right? Or if it comes up green, you lose. Point being is that when you put that stop loss on, you're basically saying, I'm betting that the stop loss doesn't get hit. I'm quote unquote gambling that this stop loss does not get hit. So if you think about it that way, because you can't control whether or not you're going to have a winner, the market decides that. It's just like you can't control if that ball's going to land in on a black number or a green number or a red number. But what you can do in trading is you can cut your losses quicker than what your stop loss is. And you can take a small profit if the market gives you the opportunity and you're quick enough. So a lot of times when you look at things from a different perspective, you see things differently. And sometimes when you see things differently is when you get that little aha moment. And sometimes that's the difference that makes the difference in your performance, in your results, in your outcomes. So a lot of traders are struggling out there, with stop loss, with finding methods, with what indicators to use. But if you think of a stop loss and say, hey, you know what, I'm just placing a bet here. It might take some of that strain, that mental anguish, mental bandwidth that you're using. And you go, okay, yeah, I bet that price won't go here before it goes there. And so maybe that'll help. Let me know. And as we look at price, we're looks like we're making possibly a new yearly low here on the pound dollar. You can see we're 6 pips off the daily low at the moment, weekly, we broke out of the previous week's lower wick zone there. All gaps have filled. 146 pips below the weekly open. We actually broke out of the opening range for the week today. We broke out of the opening range for the month. We're 21 pips above the yearly low. This is all on the pound. And as you can see, it's dropping even lower. Huh. Did I turn off the auto on that one? You can see here, now we're 19 pips above the yearly low. So you could maybe place a bet here. You could bet that we'll go up, but we won't hit the yearly low. I wouldn't take that bet at the moment. Mainly because all the candle color multimeters is a sea of red right now. So I really wouldn't want to go against all of those. We broke the inside bar from yesterday. So inside bar traders, once again, rewarded. And there's lots of inside bar action because since the bank holiday yesterday, July 4th, didn't expect the market to move that much. Right now, 174 pip range on the pound. This is like the good old days back in 2008 or so. We had those big ranges. Buy zone. He had a nice short trigger and nothing but red since then. Green rats, get ready. And once again, for the rat traders out there, I know there's a couple new rat traders. Whatever candle color you pick, make sure that candle color agrees with you. So in other words, if you're going to, use the H1, make sure if you're a green rat, make sure H1's green. If you're using M30, make sure M30's green when you take that trade. That one little rule can help you out. Let's see, price near the pivot bias is short. That definitely paid off big time. We're actually past S4 on the charts here. I don't even know if it goes any higher. Nope, I think S4 is as high as it goes on that particular indicator. We're almost at the weekly S1. Let's see, we took out the weekly pivot, we took out the daily pivot, and we haven't taken out the monthly pivot yet. So this year's kind of interesting. We've got 3 missed pivots. We might end the year with at least 1, maybe more. Who knows? Got half the year left to go, right? There really wasn't much of a lower wick zone. Well, I guess there was because it was pretty much a doji. So out of that doji. And we're down into the 119.40s, which if you've been watching my videos for the past year, you know I've discovered that the pound likes to launch out of the 40, but usually it has to come up to the 40 from the 30, and then it'll launch usually up to the 60. So we'll just wait and see what happens. Once again, you could just place a bet saying, I bet it's going to hit 40 before it hits or it's going to hit 60 before it hits 30. But that's not a bet I would take right now because once again, everything is red here. If you got a 3 ball, look for the lowest high break trigger. But we've already got 25 pip range on the hour. Through the ATR zone, it's way below. We've got a bunch of pairs below the ATR zone at the moment. And for the holo traders and the 1, 2, 3 traders, you can see here we're putting in a new low this bar, so you might want to wait till the next bar to look for a long. Wall mall traders have been rewarded. Once again, these ranges are pretty big. In fact, I was talking to Wall Mall earlier, and he said he had a chart up where he was looking at the last 12 hours, I think he said, 12 hours worth. And there's just some huge, huge moves there. Once again, simple horizontal line trade. And you can place your bet that if it comes down to the line, that'll hit this line before it hits that line. And that's pretty much a risk reward of 1-to-1. And when you look at the chart, it's like, how many of those would you lose if you trade this during the best time to trade it? And let's see. Looks like we hit a low. We hit the 140. So now, will it hit 60? Or will it hit 30? We'll just have to wait and see. Maybe we'll come back tomorrow and check that out. Flip-flop here. You can see we had a short indication and price dropped through there. Good for 13 pips. And I'm wondering, why do I have the high minus the close? I think we were looking at must have been looking at rats. Oh, I think that's what we're looking at, red rats. Because that would be the upper wick, high minus close. And so you can see here, greater than 20, 78% of the time, last 1,000 bars, greater than 10, 92%. So greater than 30, 67% of the time. So that means if you get in the, take a short in the rat zone, looks like probably have a chance at least 2 out of 3 times you're going to produce a winner. Not bad statistics. And what I mean by that is, looking to go from, say, 20 to 30 or better. And I just saw a 39 over here on price. So let's just see if price comes back up into that launch pad and takes off. So, fellow traders, people put down trading as gambling, but if you look at it in a proper way, it might help you pull the trigger when you're supposed to, because you know what the worst thing is that can happen, because of your stop loss, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.